6:52 now, 1320 WILS. Well, the markets today actually had a reasonably good day. This after it looked like things were completely melting down yesterday. So where are we now? Let's talk to Clark Hodges, financial strategist at HodgesCapital.com. Hey, Clark, great to have you here.
Hey, good to be on with you again.
And you've been doing this for a while. Were you around during the 87 crash?
No, I was in college. My father was in the business and actually had randomly was in his office, even though I wasn't in the same town. I came in town that day. It was a Monday.
Uh-huh.
And I just popped by to say hi to him as I was going back to college out of town. And I walked in, and everybody was just in panic, and it was that huge sell-off in Black Monday of 87.
Was he in a panic also?
You know what's funny? Back then, you had to use a squawk box to call down to the floor of the exchange to get orders in, to get sizable orders in, if you even wanted to buy like 5,000 shares or more of something.
Mm-hmm.
And he was trying to get somebody to respond on the other end of the squawk box to pick up and take some orders from him, because my father was a real historian of the market, and he knew that after such a bad sell-off day,
mm-hmm.
that in 18 months after that bad sell-off day, the market would be higher.
It would come back. Did anyone respond to him?
He was just trying to buy.
Yeah.
He did get some things bought. He was frustrated because he didn't have as much time, because, eventually those people go home.
Right.
But I do remember him being very animated to try to get a hold of somebody to enter some orders for the next morning.
Is he the one that started Hodges Capital? Or?
Yes, sir. Yes, he is.
Uh-huh. And what? Did he encourage you to get into the business, or did you just want to yourself?
He did not. He was the kind of guy that never would put pressure, and I actually graduated college with a degree in real estate,
mm-hmm.
and for 2.5 years tried to do commercial real estate in Dallas, and I got to the point where I didn't like it, and it wasn't a good market back then.
Mm-hmm.
And so on my own, I just went over to his office one day and I said, "Dad, I think I want to give your business a try." And he said, "I've been waiting to hear that. Come on." So he never did put pressure. And I've got 2 siblings, and they're in the business as well, and they both have different stories how they got into the business. But
it's an up and down business, so I'm sure there are moments where things are great and others where maybe not. So my question is right now, how are you feeling at this point in the year in terms of what's happened so far?
I feel very confident that what we're seeing is temporary, and what we're seeing is a tremendous opportunity to buy quality stocks,
mm-hmm.
only if you're a long-term investor, though. I'm not saying next week we're going to be back to normal and everything's going to be great, but what I am saying is that fundamentals of companies, earnings, and the price-earnings multiple that they trade at,
mm-hmm.
You're seeing some ridiculous valuations right now. And it truly is a throw the baby out with the bathwater type of feel. So you're looking
that's
at
happening right now. Well, when's the last time you think we saw something like what's happening right now?
Probably 08.
In 08, really? You're starting to feel like something like that?
I'm starting to feel that fundamentals don't matter. I mean,
mm-hmm.
When you have a company that's trading at 4 times earnings and the company's growth rate is 12, fundamentally that is a screaming buy, okay? So you're seeing situations like that, and you're saying to yourself, fundamentals are not mattering right now. I don't know why. I'm not going to try to figure out why,
mm-hmm.
but I am going to say that in the long run, fundamentals will matter again. And if you do find something cheap enough, it's probably a good buy.
For someone that thinks the long run is this year, let's say, how would you approach the markets if that's the timeline you're looking at?
If you want to make money this year, I would be a buyer of mutual funds as opposed to individual names, because individual stocks, you've got to pick the right one. And typically, if you have, let's say you have $10,000, typically to buy a stock with $10,000, you typically would just buy one stock. But buying $10,000 worth of a mutual fund automatically diversifies you, and you own a representation of probably 100 different companies.
Yeah, we've had days where it seems like almost all the stocks except for a handful are down, right, so far this year.
Oh yes, for sure.
Do you believe we could actually have a true bear market this year?
I do not, because I believe that bear markets start when there is such a euphoric state in the market that nobody sees it coming. And we are not in a euphoric type of market, and we are not overvalued, and we do see a lot of opportunity going forward. So I think we're not in a bear market. I think you can say different segments might be in bear market territory. And what I mean by that is if you look at just the performance of just the small cap sector, you could argue that the small cap stocks are in a bear market. They're down over 20%, and that would be the definition. But overall economic, we're not in a recession. We're not going to go into a recession, I don't think. But I think you could make the case that the energy business is in a recession. So there are weaknesses in the economy. There are strengths in the economy. But when you have a sell-off that brings everything down, you have an opportunity. It's not very easy to step in there and buy. Step in there and buy a falling knife.
It's like stepping in front of a train, right? Hey, tell me this, Clark. Were you doing a lot of buying yesterday?
I did buy yesterday. I did. I bought a stock yesterday from my own personal account. And for our mutual funds, we're always buying, and we're buying every single day typically. And I don't know specifically what stocks were bought today in the fund, but we were definitely buying.
Yeah, and do you think, because they use that word capitulation, right? Is that something you think we might have seen even yesterday? Or?
I think there's a chance that we could. One of the indicators, which is not scientific by any stretch of the imagination, but a firm like ours, we manage the money for the individual, for the high net worth client. So the client doesn't make any decisions. They just say, here, we think you guys can handle it, manage my money. When you have a business like that, you usually don't have frequent conversations with your clients.
Right.
But when you go through a market like we've gone through in the last two and a half weeks, all of a sudden all these clients are calling. And they're worried and they're concerned. And even some of them are saying, get me out. And that's really a good sign for the bottom.
The fact that people are reacting that way.
The fact that people are saying this is so painful to them that they're going to call up and say, I can't take it anymore, get me out of these stocks. That usually means that we're very close to a bottom. That did happen in 2009, in March of 2009. And so, not knowing the future, obviously, we've had a lot of calls like that this week. And so maybe we are towards a low,
getting
towards
close
the bottom.
to it. If not, I guess there's more to go. I just saw an article on Market Watch said Dow could fall another 1,000 to 5,000 points. That was the prediction from one of these guys. I mean, you see these all the time, right? These predictions.
Right, and you know what? It could. Anything's possible. But anybody that says they actually know, you need to run because they don't know. It's all guessing. That's why the best way to approach the market is to approach it from a long-term perspective. Because, quite frankly, the short-term perspective is just the same as going to Las Vegas.
Yeah. What do you think is moving the markets short-term now? Is it just people having that reaction you're describing, just get me out? Is that, or is it something else?
I think what's moving, like today, moving it up, you had oil prices go up a little bit. You get a little bit farther away from the whole China fear, and people start to realize that China's not that impactful on a lot of businesses. I mean, we invest in businesses all day long that have zero exposure to China, but their stocks have definitely been hit like they do have exposure to China. So I think the farther away you get away from a headline, which was the headline of China last week, the more bulls step in.
Yeah, they need to
One thing that's true about markets is every single day there's somebody that has to sell stock for a certain reason. There's not typically every single day somebody needs to buy, but when stocks get low enough, you start to see that pendulum shift where people are saying, this is just a buy, period. I'm just going to get in there and buy.
You need to be
the buying brings it up.
Courageous bulls. Clark Hodges, financial strategist, HodgesCapital.com. Clark, thanks.